Hello everyone and welcome to the latest installment of the Hack.com webinar series for January the 26th, 2018. It is still the 26th here for another 45 minutes or so on the eastern seaboard of North America. My name is Sam Borgi, Chief Editor of Hack. We're very happy to have you join us wherever you may be and whenever you may have clicked this video. As you know, at Hack.com, we strive to become the #1 resource for all things cryptocurrency, whether it's resources, analysis, trade recommendations. We breathe, live the crypto market, as well as the financial markets more generally, essentially helping you achieve financial independence, and that's why we're here. Over the next little while, we just want to give you an overview of the week that was in the market, and then draw your attention to potentially some of the upcoming events or considerations that crypto traders or financial market investors in general should bear in mind as we move forward. As you know, January has been a highly volatile month for the cryptocurrency market. We started off on a bang, and then some regulatory uncertainty tied to South Korea dragged the market lower. We still saw the remnants of that this week as cryptos continued to essentially peel back from their record highs. We saw a rally over the weekend that stalled as we headed into the middle of the week. More of that in the next few moments. We're very happy to have you join us, and let us know if you have any questions or comments in the comment section below. We like to keep our agenda very light, very simple. We want to give you a weekly recap of the market, focusing especially on the global cryptocurrency market, looking at Bitcoin and the altcoins, depending on what was the most noteworthy that week. We're then going to give you a recap of Hack.com and what we've been doing on the website and what you can potentially look for next week and how that could influence the market. So, of course, the cryptocurrency market made a tepid recovery this week. If you were trading the market last weekend, you'll note that we did see a sustained rally over Saturday and Sunday, following what I think to be probably the biggest crash the market has ever seen. Nevertheless, the rally that we saw over the weekend faded, and we really saw cryptos meander for long periods of time throughout the week. Now, of course, long period of time in the crypto market is it's a relative concept. Overall, the overall market cap for cryptocurrencies declined this week. We still see the major coins, Bitcoin, Ethereum, Ripple, struggling to regain momentum. Bitcoin has been holding well below $12,000 as its market share holds on to about a third of the total market cap. We've seen Bitcoin fall below 10,000 briefly. We'll see where it goes, but Bitcoin especially has been under a lot of pressure since hitting record highs at the end of December. So that's one coin, of course, that's really the bellwether of the entire industry. It has been struggling, so you'd expect that the broader market will also have some difficulty. We also saw South Korea ban anonymous cryptocurrency trading accounts. Of course, a lot of people in the media, the mainstream media, were crying about an all-out ban on cryptos. That was never really the case. I know that there was a justice minister who said they were considering it. But the only thing that was announced last week was that South Korea would be banning anonymous cryptocurrency accounts in its effort to stem speculation in the market. Also, huge news on Friday. There was essentially the biggest theft of a digital currency exchange ever. Coincheck lost 500 million NEM tokens. That says 500 NEM tokens. It should say 500 million. It was essentially the biggest cyber breach of a digital currency platform of all time, and the fallout of that is still unraveling. I have a slide dedicated to that in a few moments. Bitcoin, of course, here's your chart. We are at the time of the presentation was put together, we were at around $11,000. This chart, of course, is courtesy of Bar Chart. We see how the market spiked again in early January. Again, not at record highs, but we saw a good sustained rally before a sharp decline. In this right here, we saw what I consider to be one of the biggest crashes ever in the crypto market, if not the biggest. I mean, we lost over $300 billion from the market cap in the span of a few days. Bitcoin just demonstrates what happened during that period. Since then, we've seen, again, a sustained rally over the weekend before the market again faded back below 12,000. Okay, so Coincheck, which is it's an exchange that's based in Japan. And as you know, Japan has very favorable regulations governing cryptocurrencies. Coincheck lost about $500 million worth, 500 million NEM tokens they were stolen from the exchange. Various estimates about the monetary value, of course, it depends on NEM's price, but anywhere between $400 million and $700 million, depending on what exchange you're monitoring the price point of the cryptocurrency. For those of you who are unaware, NEM is the 10th most capitalized crypto on the market, so it's a pretty big deal. It's actually considered to be the biggest theft of an exchange of all time, even larger than the now defunct Mt Gox. Although, of course, the market now is much more mature than at the time of Mt Gox. So, even though the monetary value is bigger in terms of the loss, the impact on the market will be far less because we are looking at a much more liquid market, a much bigger market that extends far beyond Bitcoin. And of course, cryptocurrency exchanges, ICOs, have been highly vulnerable to attacks. I mean, make no mistake, guys. I mean, you probably should hold your cryptos in a hardware wallet, or at least on an exchange that offers that kind of capability, where they store the coins, in a secure location off of the main server, simply because the crypto market is highly susceptible to breaches. So we just saw a report coming out from Ernst & Young. We reported it on hack.com that estimated that 10% of all ICO funds have been compromised by hackers. Based on the metric they were using, that's over $400 million. So this isn't just a one-off. It's one of the biggest challenges facing the market. Hackers are working 24/7 to try to steal as much as they can of these highly priced coins. As we know, the surge in crypto assets over the past 12 months has made this whole process much more appealing. And here's a chart illustrating the global cryptocurrency market cap over the past 7 days. Again, we had a sustained rally there over the weekend, or I should say a nice spike during the weekend, but it wasn't sustained. And at the time of writing, the crypto market was around $540 billion to $550 billion, essentially where it's been for the past few days. So that was covering cryptocurrencies. Of course, we also monitor the broader financial markets. Stocks had another absolutely amazing week, especially on Friday. The S&P, the Dow, the Nasdaq surged on Friday. They're actually now up between 7.5% to 8.5% this year. I don't think I remember any time where stocks have been rising as quickly. I mean, an 8% gain in the S&P 500 in less than a month is insane. We are keeping track of earnings. As you know, Q4 earnings have been largely positive. According to FactSet, the blended earnings gain for the S&P 500 is about 12% so far year over year. That's assuming a quarter of the companies have reported so far. I mean, there's a lot of reasons why the market is going up. I mean, a lot of it is tied to expectations. Pro-growth optimism remains, even though Q4 GDP data on Friday disappointed. We only grew 2.6% annually in the United States in the fourth quarter, which was below forecasts. Trump's State of the Union address is coming in January the 30th, so in a couple of days. We should be looking for that as we move into next week. Now, when it comes to hack.com, as you know, we're constantly ramping up our capacity. We're brought in a bunch of new writers. We're constantly looking for ways to give you the resources that you need. We covered about 7 ICOs this week, so we got one per day as we always wish. Some of them included Data Wallet, Coinvest, Daddy, or Daddy. I don't know how that's pronounced exactly, but Daddy. Those were some of the most popular ones that were read this week. In terms of the most read articles, Tron, again, was the number one. I covered that when we saw a huge spike in price, but nevertheless, lots of controversy surrounding that project right now. A trade recommendation for January 21st involving Litecoin. I know a lot of you are really actively following Litecoin. That was also a top viewed piece. Cryptos pivot sharply lower after weekend rebound. We covered that early in the week as the market was unable to sustain its rally. ICO analyses of Daddy and Coinvest round out the top 5. So next week, we are paying attention, of course, again, to looking at the evolution of regulation in South Korea. There's going to be a lot of sound bites, perhaps speculation about where regulation may end up in the future. Nothing is stopping Seoul from continuing to regulate the market or from introducing new regulations. Will China lift its ban on ICOs? That's subject to heavy speculation. I personally believe they will. We saw, obviously, China is a centralized economy. Anything that's kind of outside of the purview of what Beijing can control, they're going to try to scale back on. And if you recall, the all-out ban on cryptos last time happened essentially around the time where there was a big Communist Party meeting that was going to happen. And of course, the loyalists or the purists to the, I'm trying to be polite here, but those who really follow the mantra of state planning essentially wanted to drive home that point that, Beijing still has a central control of the economy, even though, China's resilience over the decades has come precisely because it has been liberalizing its economy. So there's a lot of political factors behind the ban. I think that we could see a reversal of that. At the very least, Beijing will allow ICOs in a highly regulated environment. That's my take on it. I know there are some industry voices who are also in the same boat on where China can end up on the ICO front. Let's just wait and see where that goes. Of course, earnings continue as stocks are on the up and up. Trump's State of the Union address comes January the 30th. From a data perspective, we do have an active week culminating in Friday's U.S. non-farm payrolls report. That covers it, everyone. Again, I'm really appreciative of your time. I hope that you've enjoyed this last 10 or 15 minutes. Let us know in the comment section if you have any questions or comments, what you thought about this video. Visit hack.com for all your crypto resource needs. We have trading recommendations, fundamental and technical analysis, ICO reviews and analyses pretty much every single day. And we hope that you join us. Until next time, we'll catch you next week. Take care.